Folks, you have undoubtedly hear me repeat over and over the last 7 to 10 days that my greater fear is a liquidity crisis leads to downright deflation and not this runaway inflation that some people are putting out there. So I thought I would bring on a Wall Street veteran. I thought I would ask him questions that maybe you and I could look at to see that this is a liquidity drain. So Taylor, I couldn't imagine a better guy to bring to in my millionaire suite of experts. Tell us what's going on in the market. Talk about liquidity. Are we on the cusp of a crisis? If so, what does it mean? And is runaway inflation the right answer and I'm just wrong?
Yeah, so let's, I want to make a note on your big use of the D word, deflation, because deflation is an interesting topic. It sounds like the world's greatest problem where prices go down. It is not. It's a much worse problem than inflation. We could talk about that in a couple minutes here. But yeah, no, I totally agree with you that this is going to create liquidity issues across the entire market if it compounds at the rate it is. And so if people continue to have concerns with the banking system, there continues to be many runs on the bank, specifically regional banks, flushing money into the bigger, larger institutions. These industries that are the financial sector that are in charge of essentially loaning out money to our entire economy to keep things functioning and running are going to face more stress, and they're going to be less willing to lend out money to folks to spur on the economy, creating that liquidity concern that you're talking about there. So I totally agree with you that liquidity is going to start to dry up some. And again, that will take care of some.
Dude, some?
Come at me.
Really?
I love it. I love it. Come on. No, agree. Hey, listen, maybe I understated it. I used the wrong word.
Yeah. Some is, dude, you're being soft. It is good. Liquidity is drying up now faster than any time perhaps since the early 80s. And again, think about what happens, right? Again, one of the things that I'm pushing, and I'm going to love to see this. So you have undoubtedly heard that the savings rate is an all-time low, right? 3% or whatever.
Yep, exactly right.
I believe it's going to crash into the ones. It's going to look horrific. But why? It's because mom and dad are taking money out of the bank, putting it under their mattress. Mom and dad are taking money out of the bank and buying gold. You know, Johnny and Jennifer are buying Bitcoin. The rich people are buying treasuries. There's going to be no cash left. And people are going to freak out about these cash balances. People did this in the 80s. Banks were paying 4%. You can get 15% in a treasury. What are you supposed to do? You go buy treasuries. And that flip started what will become the S&L crisis, which we will hit in the third video. But yeah, this has been.
Warren Buffett was buying treasuries. He is not he is not a bond buyer. He stepped in and goes, listen, you're going to give me 15%? I can't look at the stock market and say I'm going to beat that.
Yeah, exactly right. He's like, okay, I'll just park it over there.
That's it.
So again, look, and then even Lloyd, I think it's Blackfein, right? The ex-CEO of Goldman Sachs.
Yep, exactly right.
He came out this morning and said, look, this is a liquidity problem. Regional banks are going to have to rebuild their balance sheet, and it's going to take time. And what people don't realize is regional banks, at least as of last year, were 50% of transactions in the commercial real estate market.
Interesting. I didn't have that stat. That's awesome. Yeah. I mean, not awesome. It's actually not awesome because they're now going to be constrained with that 50%, but it's interesting to know that.
Yeah. So again, they were 50% of volume in commercial, and that's all types. Multifamily, builders, right? The whole bucket. You can Google it. It's right there for you. Sure. But if regional banks are in as dire shape as we just said they were in video one.
Yeah. It's not pretty. It's not pretty at all.
Not good.
Yeah. I mean, and the trust factor there is like, again, in video one, we talked about them looking for some government help. And I think that the government probably does step in. It's interesting. Regional banks are unique to the United States.
Yeah.
Canada doesn't have regional banks. Most of Europe doesn't have regional banks. They're dominated by huge institutions that are largely nationalized, to be honest with you. Sure. And again, our capitalistic society here has had us using regional banks and people competing for business, and people like to know the person that they're working with at the regional bank, so on and so forth. But it does come with some issues along the way. And more times than not, I think it's probably additive to our system and that capitalistic behavior. But when things get stressed like they do, and this was caused by inflation and the Fed, You know, it came from that unique scenario. COVID was weird. We had to inject a ton of money into the system, and maybe we didn't do things perfectly. I totally get it, but the economy would be in ruins right now if we didn't do what we did during COVID, is my true and honest belief. Maybe you disagree with that, but
well, again, if you choose to shut down the economy, which
right,
actually
given
I think
given that as the baseline, that happened.
Yeah. But if you go back one further step and you don't shut down the economy, I think it would be interesting to see where we ended up.
Oh, I definitely agree. That would be that. Yeah, that's something we'll never know. But I totally agree with you on that sentiment. We did, but once we decided we were going to force
once we did
everybody to shut down,
B became the answer. Totally
correct.
good.
And
but if you go back and reverse A,
correct, totally agree. But the result was inflation, higher rates, bank stress, and it's something that I'm surprised it wasn't covered more, honestly, from folks that had seen the savings and loan crisis and what played out there. Like, that's repeating itself now. And that shouldn't have been something that totally took us from a blind side.
Because all the old folks are gone and old people just realize, again, that's what I see on my channel. A lot of people like, if one more comment says money printer goes BRRRR, I'm going to lose my mind. That's not what's happening, right? Not that it may not happen as a counter to this crisis. It absolutely could. But as of right now, at 8:22 a.m. on Monday, the 20th, this is liquidity, and deflation is the bigger fear, not inflation.
Correct. And I'll touch on deflation real quick here,
Please.
Because deflation is the world's worst problem. And I don't say that with any stretch or any exaggeration. The world's worst problem is deflation. We saw it in Japan. Japan, it played out for 3 decades. Japan went from 40% of the global market cap. When you take the value of all stocks combined, they were 40%. Now they're about 6% because they've gone through 3 decades of deflation. When people realize they can buy something for cheaper in the future than they could buy it now, they don't buy it now, and the government stops. Not the government. The economy stops. It slows down. It hits gridlock. We sent all of our brightest people, Harvard professors, economists, so on and so forth, and so did everyone else around the world, sent them to a summit in Japan in the mid-90s and said, guys, you're in a deflationary spiral. Here's what you got to do. We'll get you out of this. You flood the money with system, quantitative easing. You do targeted asset purchases, on and on and on. Once that sentiment is set in, it can't be reversed, or it can't be reversed easily. It takes time.
Wow.
Deflation sounds like a great problem. Things are cheaper in the future. It is not. It's a disaster. It's a crisis.
Yeah. And again, what people don't realize is a lot of people hear deflation and they think it's going to hurt the rich, asset values. That's where their mind goes. But I want you to step back and realize that the economy is built on inflation. If we get into a deflationary environment, just like the Great Depression, we could have 20-25% unemployment. We will have less small businesses. It will trickle. Yeah, sure. You could see some asset deflation, fine, but it will trickle. The little guy will get crushed in a deflationary environment.
No doubt. We want disinflation from 6% where we currently
disinflation
sit.
Is good.
Correct.
Deflation, bad. So again, I don't know how to get out of this. The simple answer, and I don't mean to sound coy, is you have to reestablish consumer belief and faith in their bank. And unfortunately, I think this theater about FDIC limits is not the right answer. It's just, it doesn't matter. Mom and dad don't care. Mom and dad don't have 250 grand. So who cares if it's $1 million? We don't need to protect the wealthy.
I'm going to disagree.
Awesome.
I think that the deposit base needs to be something that people understand, know is 100% safe, backed by the government. And banks have to know this accordingly as well and make their own adjustments. But you can't be a small business that has $1.25 million and you have 8 employees that you need to pay on a weekly basis and not have that deposit be sound and know that it's going to be there to pay on a Friday.
Well, here's the deal. So we actually agree on that. I think the simple answer, and again, what they're doing now is theater, is you can take the FDIC limit from 250 to 500 for consumers so you can say you did something. But the easy freaking answer is create a business line FDIC limit at 2.5 million or 10 million or 25 million. But there are fees and expenses there. Stop this FDIC for everyone. There's FDIC for consumer and there's FDIC for business. All of my LLCs, I have business accounts. I have to check a box. Is this individual or business? And business comes with new fees.
Guess what happens with that? the people that have higher limitations on their FDIC insurance pay a higher portion of that banking insurance fee to the bank. The person
Mom and
responsible
dad aren't
for
hurt.
correct. And you and tell me you wouldn't be like, okay, makes sense
Yeah, I'm
to
good
me.
with that. I'm
Yeah.
fine with that. Yeah.
Yeah.
I actually don't like my LLCs having 5 bank accounts. I would love to have them somewhere, and I'm
Correct.
willing to pay for that.
Correct.
But
Correct. It's a hassle. It's a hassle. It's a hassle to have
is.
them so many different places. There's no doubt about it. How many different passwords do you have? Oh shit, I can't even find it. Where is it? Nightmare.
Yeah, nightmare. Yeah, yeah. So at the end of the day, there are ways around this. This theater about just the FDIC one limit for all is crazy. Banks have business accounts and consumer accounts. Have them be different. It's okay.
And for that matter, though, why don't we just do a little bit more of a sliding scale on even consumers? Consumers can get insured to $1 million, and it's just you're gonna get charged a fee along with that.
Yeah, it costs you $8 or whatever. Yeah, I mean,
yeah,
you
it costs
could
you
do
$8 a year. At the end of the day, it's
Yeah.
going to be de minimis amount of money in order to insure it. Don't get me wrong.
Yeah.
But I'm totally fine with that as well.
Yeah. So at the end of the day, liquidity crisis is and always starts with faith. Faith is broken. We are seeing we're seeing deposits fly out. I think Bank of America the other day had $160 billion show up in 4 days. Think about that.
People are moving money from regionals into big banks. Business owners were scrambling over the weekend when Silicon Valley Bank failed. Not just those that had their money at Silicon Valley Bank, the smart people that had their money at any non-large institutionalized bank were like, that is not what I want to happen. Yeah. I'm going to scramble and get money to the big places as quickly as I can.
Yeah, I interviewed a Silicon Valley tech executive who had all their money at Silicon Valley Bank and talked about what happened. Yeah.
So, I got to go back and watch it.
Yeah. So go back and watch the playlist Hem Lane. She goes through she got a call at 6 a.m. from somebody who said, I got to move $4 billion. I suggest you move yours. So there's a whole discussion on that. So Dana
Holy
from
smokes.
Hem Lane.
It
was emotional. She said she got to Sunday and that note came out about this or that. She had nothing left. She just broke down and cried because she hadn't slept. She was so stressed. It was crazy. You got to go watch it. You could see it on her face that she was reliving the moment. So
yeah,
at the end of the day, folks, we have a liquidity crisis, not currently runaway inflation. So stop thinking that. Taylor, I know you put it out every day. What should people go follow?
Yeah, follow us on Instagram and TikTok. We do a little different things on both. We're at Life Goal Investments,
Thank you so much.